April 15th, 2025. I don't have a ton of time today, so I'm just going to make a really quick review on what I did today and what I thought of the day overall. Um, this whole sell-off down might have needed a second leg, so it's a little bit difficult to buy, but you know that 1, 2, and 3 is probably going to get some sort of attempt at a symmetrical second leg. You can see we never quite reached it. We ended up failing at the new high, so we got a pullback, smaller second leg, and then another pullback, 6, 7, trying to get a bigger second leg, a symmetrical second leg. Bar 6 was pretty large, so it probably needed some sort of second leg, so some traders sell above, scaling it higher. And obviously 9 is a pretty large failure. So although it went pretty far up, the fact that it failed as dramatically as it did increased the chances that we go a little more sideways to down. 10 is a pretty large bar, but it's not really breaking out of anything. The low of the trading range is bar 1. So if you're selling the close of 10, it's not really it's just not really breaking out of anything. You probably wanted a little bit more follow through. It went below 1, so you could argue there's a breakout there, but it did not close below 1, and there's no follow through closing below 1. So 11 and 12 10, 11, and 12 being unable to close below 1 is a problem for the Bears because they do not really have a breakout. 13, a big bull bar. It's a possible 3 legs down. 1, pullback, 2, pullback, 3. So potentially 13 should get a second leg. Some traders might buy the close of 13, looking for another leg sideways to up, and they're willing to scale in on 14, expecting that bar 13 is leg 1, and that they should get another leg up like they did on bar 15. 15 is a big enough bull bar, but it is leg 2, so a little bit less of a chance that we get a leg 3, but still a good chance with a bar that's this large that we get some sort of leg 3. 9, 10, 11, 12 is a 4-bar micro channel. So although we should get a couple of legs up, we're probably going to test back into this area at some point. The whole day was essentially forming a triangle. So the important part, if depending on how you like to trade, whatever it is you like to do, if you're trading, swing trading and stuff, it's really important on these days to not get chewed up, sell below 18, buy above 19, buy above 21, sell below 24, and then just keep taking all these losses that aren't quite full losses, but death by 1,000 cuts. You sell here, then you buy here, you take a very small win on 36, but then you take a full loss here, and you don't have the heart to sell again 40, 41 on the one that works. So you have to be really, really careful if you're going to be swing trading, especially in this environment, because it's so sideways and a really flat moving average. So anytime you start to see a triangle form, to be honest, if I'm a swing trader, I when I used to be really, really interested in swing trading, these would be the kind of days that would cut me up the worst. So if I were you and you wanted to be a swing trader, I would be very careful participating in the middle of tight trading ranges, and I would probably just leave it alone altogether because you're probably just going to do a lot better if you don't trade in a triangle, because it can only contract for so long. It can't be, because then the range would become 0. So it's better to probably just wait for a breakout attempt like we get on bar 41 and then look to sell there. So for my first trade of the day, I bought the close of 31. It wasn't as great as I wanted it to be. I was probably forcing it a little bit because I just wanted to take a trade. I was initially interested in scaling in, but after bar 38, I just decided that I was going to get out because it's 3 bear bars, 36, 37, 38. If I'm buying the close of 31, I'm hoping to get a second leg up. And, my attempt at a second leg up probably started on 35 and 36. I was hoping we were going to break out to the upside of the triangle, and instead we reversed down. And so 36, 37, 38, rather than just turning this trade into a really expensive mistake, I just decided to get out on the close of 38 because odds are this is 36 through 38 is going to get a second leg. This is also a 3-bar micro channel, and a lot of 3-bar micro channels get pullbacks, so you can expect a pullback. Some traders would scale in more here and use 39 and 40 to get out around break even. Let's say you bought the close of 31, you bought more on the close of 38. Some traders would do that and get out around break even, which also highlights the other problem of buying above 39. You're buying against a 3-bar micro channel, 36, 37, 38, that is going to get a second leg. You're also buying at the break-even price of the bulls who bought earlier and are using the scale in to get out. So those traders are not happy. You're buying more, and they're using this to get out. And then you'd also be buying on a flat moving average of 39. So it's really not very good to be buying above 39. Disappointing follow through on 40 if you did. And again, the bears 36 through 38 are expecting another leg down. So my first trade, I bought the close and I exited in here for a small loss. I sold the close of 42. I sold more at a 25% pullback, which was somewhere in here. So I sold here, and I went for a symmetrical leg 2, which ended up being right here. So this is my exit. So I sold here and sold more here, and I exited down here. And then I did not sell the close of 48. It was a breakout below the low of the day, the 11 low, and a breakout below bar 80. So good for the bears. It is a breakout, and it probably should get a pullback and then another leg down. That's the most likely scenario. Obviously, this pullback is deeper than you would like it to be if you're a bear. 50 is a disappointing bar, but it's an outside bar, so it's probably not going to lead to too much more to the upside. And still, odds are this is still a breakout. It's still probably going to get a second leg. I did not sell the close of 48 because of the tails. I thought that while it was a breakout, we have consecutive closes below the bar 11 low, which is probably what I would use for the breakout point. While we do have consecutive closes below there, they're not strong. There's a large tail on 47 and a large tail on 48. So, that's not what I want to see. If I want to see a really, really strong breakout, I want to see really strong bars closing, basically on their lows, near their lows. This is bad context. It's not the same thing at all. But in theory, you want to see bars like bar 47. That's what I wanted to see here. I wanted to see 47 and 48 look like the bar 47 yesterday. I wanted to see strong, or a better example, these bars, right? It's their bear bars. Something like get bars like 38 and a strong breakout below this low. And instead, we're getting large tails and disappointment. So what am I going to do? Well, I'm not really that interested in selling this close. I'm going to look to sell pullbacks. So I sold a 25% pullback. So I sold basically here. I sold more here, and I sold more here. So I sold 25, 50, 75% of the signal range up. And then on bar 53, I got out around the close of 48. So basically sold, and then got out down here for a profit. 53, big enough that it's going to get another piece down, and 54 is not strong enough and reversing enough of this bar to make me think otherwise. So most likely another leg down. And you can see we get that other leg down, 57, 58. The rally to 61 should get some sort of second leg up. I would not really be that interested in buying 61 though. On the 15-minute chart for the bears, to this point, we had like a 9-bar micro channel down. So buying in this area is really subpar. So I would personally just rather wait. And then there is also not a micro gap, and I don't really tend to take the trades without the micro gaps because the best ones, higher probability of a win with a micro gap. And it's right on the moving average too. 61, if you're buying exactly on the moving average. Not very good. So odds are that, well, it does work this time, right? 1, pullback 2. It does work this time, and it might work 65% of the time, but that's not enough to justify the risk reward of buying if you're willing to scale in. So I'm looking for stuff that I think is going to work maybe 80% of the time, 75 to 80% of the time. Those are the trades I'm looking to take. 70 is pretty much like the bare minimum for scalping. So in my mind, I probably want to take trades that are closer to 75% chance of some sort of win. But anyways, I did not take this. So I had 3 trades in the day: the small loss, the win, and the win. So I ended up the reasonable amount green today. We have 4 legs up: 1, pullback 2, pullback 3, pullback 4. So not surprising that we're getting a leg down. And again, leg counting is important because 71 is leg 1. It's on the moving average, not great, but it does get followed through 72. So after 4 legs up, you have to expect at least a second leg down after 71 and 72. And it looks like we're getting it here on 73 and 74. The daily chart, the bulls are not doing enough. In my mind, if I'm going to be buying, I want to see an explosive follow-through bar above the moving average, and we're not getting it. So if we continue to stall at the moving average and continue to fail, the bulls are going to give up, and we're going to get a couple more legs down. I think that this is probably the end of the bear trend, and I think it's signifying a trading range. But we might have to get into the lower third of that bar at least, right? So we might have to get back into this area, and not surprising that 5,000 is there. So I do think we probably have to go back to 5,000. I don't know how soon we do it. It kind of depends on the next couple of days, but the bulls are not doing enough. They need to get a strong bull bar closing well above the moving average. And instead, we're just continuously stalling at the moving average and getting disappointing bars. So for me, unless, the next breakout bar basically changed my mind. The next bar that looks like this in either direction. If we get a couple 100-point bar up, then I think we probably get a couple legs sideways to up, maybe come up to this area. If we get a couple 100-point bar down, maybe something to this area, then I think odds are we get 2 to 3 legs sideways to down. And that'll be a nested third leg. 1, pullback 2, and then maybe some sort of third leg down that forms a larger third leg. The weekly chart, I went over that yesterday. I'll go over it again tomorrow. the monthly chart's important, right? If I'm a bear, this went far enough down that I'm probably expecting a second leg. But, does it look like it's closing all that well? No, it really doesn't. And if this gets bought up even more, let's say the bulls get the breakout, the next couple of days could decide the month, because if the bulls get a strong breakout, then this will become a bull bar and we might have to head back up to the all-time high. I still don't think we're done with 5,000. I mentioned before over here, I'd really, if you've been watching my videos for a while, all the way over here, I was mentioning we were going to go back to 5,000. Simply because at 4,000, we oscillated around it for like 13 months. At 3,000, we broke above 3,000, we rallied above, and then we oscillated around it. We broke above 4,000, we rallied above, and then we oscillated around it. We broke above 5,000, we rallied above, and then we pulled back. We're probably going to oscillate around it. I don't know if we go back to a new high first. I don't know if we go a little more sideways first, but we're going to end up going back to 5,000 at some point and start to go more sideways for, I don't know. I mean, over here, around 4,000, we went sideways for the better part of a year, a little over a year. And around 3,000, we broke through it and then went sideways for, 14 bars, 14 months, went sideways 14 months. Maybe we go sideways for 14 months, just a thought. But yeah, that's basically going to be it for this review.